watch out for JINDAL Steel and Power JSPL because the company would be announcing its results today. And apart from that, news reports have been suggesting that JSPL is the front runner to acquire Stemcor assets in India. Of course, Stemcor has been facing some liquidity issues, and yesterday we had reports that Tata Steel also was one of the parties which was interested in Stemcor's Indian assets. But this time JSPL has now entered into exclusivity agreement with Stemcor to do the due diligence as far as the Indian assets of relating to iron ore and steel are concerned. So let's see how the stock reacts here ahead of the earnings and this news report. Also watch out for mid-cap company MAN Industries because the tussle between the two brothers has been there in the market since the last 1 year. But this time there has been various issues also pointed out by the Bombay High Court. We have the Bombay High Court which has restricted younger brother J.C. Mansukhani from holding any kind of a EGM. Well, he planned to hold a EGM for replacing chairman and his elder brother R.C. Mansukhani from the board. Of course, the tussle between the two brothers to get control of the management of MAN Industries has been, going up day by day. So let's see how the stock pans out because the company law board had earlier asked J.C. Mansukhani to sell all his shares at market price to R.C. Mansukhani. So this will be interesting takeover battle is what we understand from the news reports today morning. Also, City Union Bank came out with strong earnings, profits up 22%, net interest income for the bank grew 35%. And more importantly, the board has approved fundraising and has sought the shareholders a nod to raise close to 350 crores in terms of equity via the QIP route. And finally, we have Geometric from the mid-cap IT space, wherein the results have clearly disappointed. Of course, there was profit growth of 38% because of lower base, and the revenues for the company grew 12% on a quarter-on-quarter basis. But there was a margin disappointment, wherein the Q1 margins came in at 7% versus a margin figure of 10% on a quarter-on-quarter basis, and the company expects the cost pressures to escalate in the coming quarters.